Michael Cochran here with BentOak Capital to provide a brief market update for April 2024. Please make sure to watch till the end for an important disclosure statement. This year began with debates over a soft versus hard landing as the Fed attempted to stabilize the economy, as well as over the sustainability of last year's market rally. Only 3 months later, those concerns have given way to a calmer environment centered around fading inflation and the Fed's plans for reducing interest rates. This has resulted in a healthy start to the year for many domestic indices. The following are 3 important insights to help shed light with what we've observed so far this year and what we're closely monitoring as we enter the beginning of the second quarter. First, the economic environment has surprised many investors as inflation continues to fade. The Fed's preferred measure for inflation, the Personal Consumption Expenditures Index, rose less than 3% in its recent readings, showing improvement from its peaks only a year and a half ago. While some areas of inflation, such as shelter and energy costs, remain problematic, the rate for inflation is steadily moving back to the Fed's long-term 2% target. Second, with the outlook for the rate of inflation to be stabilizing, the focus on the Fed to begin cutting rates continues. The brighter economic forecasts and the potential for rate cuts have lifted confidence across various sectors of the market. In light of this, it's anticipated that the Federal Reserve will begin cutting rates later in the year, though the exact timing is uncertain. Regardless of when and how these rate cuts unfold, these projections signify a shift away from rate hikes initiated in early 2022. And third, the S&P 500 has posted its 5th straight monthly gain. Winning streaks of this magnitude are not only rare, but provide another positive sign for stocks. Since 1950, there have only been 30 other occurrences when the market rose for at least 5 consecutive months. Forward returns following these periods were widely positive, with average and median 12-month gains of around 12%. In addition, the S&P 500 traded higher 12 months later about 93% of the time. Adopting a long-term view enables investors to capitalize on market trends without being overly concerned about short-term fluctuations. Historical data demonstrates that the market doesn't follow a straight path, and maintaining a well-diversified strategy can cushion a portfolio against market downturns, thereby allowing investors to stay focused on their long-term goals rather than fixating on immediate market levels. In summary, considering the current scenario of markets nearing record highs, an upcoming presidential election, and anticipated Fed rate cuts, it remains prudent for clients to stay committed to their financial plan. If you haven't recently reviewed your plan, or if there are updates you wish to discuss, please feel free to contact your advisor. Additionally, if you know anyone who you believe would benefit from our services, please share our contact information with them. That concludes this month's video. We encourage you to explore the Resources tab on our website for a variety of new blogs. Also, stay tuned for regular updates via email or our social media channels.